Welcome to the Full of Tracy Money Audio Commentary. This is Owen Tracy recording, and it is 3:17 p.m. That is Central Time. Today is March 25th. Well, I thought we'd kick off in Asia this morning. The JGB yield is up to 1.58%, and that is a very clear acceleration of the trend over the last 4 or 5 months. This trend has been underway since 2019, and it really doesn't show any sign of slowing down. In fact, the acceleration suggests that the Japanese economy is under sustained inflationary pressures. But of course, what that also is doing is that it's closing the interest rate differential between Japan and lots of other countries. Whereas back in 2019, the JGB yield was negative by about 30 basis points. It's now positive by almost 1.6%, so almost a 200 basis point differential. And that's significant considering that most other government bond yields have been going sideways for the last 2 years or have been contracting. Well, what that is doing is creating some demand for the yen because its interest rate differential is narrowing, and there aren't really that many out there, or many currencies where that is being achieved. Now, when we look at the rest of the markets, the majority were in positive territory today. The Swiss market was down a tad, but most European markets were up about 1%, although the FTSE 100 was only up about 1/3%. Then there was a bit of indecision on Wall Street today, but eventually the Nasdaq closed out the day in positive territory, so did the S&P and the Dow Jones Industrials. The Mexican and Brazilian markets are also still in positive territory. So we had a generally benign day overall. Then there was also news that Russia and Ukraine have announced a ceasefire, at least in the Black Sea. And that was greeted with enthusiasm, but probably contributed to the positive performance in Europe today. Of course, then the escalation of the conflict in Gaza is still a cause of concern. But against all of this background, gold prices were firmer, silver was up quite in a fairly dynamic manner, and then copper broke out to new all-time highs for the COMEX contract. So that is clearly pricing in the arbitrage between the LME price and the COMEX price, and that is almost 100% down to the tariff threat. And of course, this whole question around tariffs remains something that is engaging